The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to review some of the best playbook trade setup opportunities that occurred this week in different sessions. I want to empower everybody before we go forward just to think about keeping things very, very simple. The purpose of me looking at a weekly template is that it allows me to reproduce in a simple, consistent manner the approach and process every single day and every single week, hunting for best playbook trade setup opportunities. As I mentioned in the last video, Monday, of course, is the opening range in any instrument, any market, every single week, whether it's futures, shares, indexes, metals, currencies, energies, all those markets, cryptos, they're all the same. Now, the opening range establishes our new boundaries, and we can break other weekly or monthly higher time frame boundaries, which we have discussed multiple times in previous videos. If you're new here or if you have questions, there are multiple videos on the playlist that dive deep into specific trade setups, and it doesn't matter which video you start with, they all cover the same concepts. Monday is day 1, Tuesday is day 2, and Wednesday is day 3 on the front side of the week. Typically, we'll see the range expansion opportunities. Now, here's the thing. You can have any type of day on day 2. What setup are you hunting? So I had this discussion with a trader yesterday. They said the playbook is vague. It's all over the place. But my response to that is the trader themselves is all over the place. The same templates show up every single week, and we're going to demonstrate that today in this video, but also a simple method of looking at individual markets to target the highest probability opportunities. It's always about targeting the best setup on the day, regardless if it's a Monday, Tuesday, Wednesday on the front side of the week, or on a Wednesday, Thursday, or Friday on the back side of the week. Now, ideally, I want to find a monkey hammer setup every single day of the week. What is a monkey hammer? That's the high of week to low of week opportunity, or low of week to high of week opportunity. Let me be very crystal clear. The same things happen every single week in the markets. Markets only do 3 things. Traders do all kinds of stuff and then say that everything else is vague. The trader is the variable. The markets do the same things every week. I'm looking for signal days on any market. Now, if you're good at following a basket, you can either follow one instrument or a basket of instruments to hunt out the same opportunities. For example, if we're looking for one signal day, this is a basket of major currency pairs. It literally would take me 10 seconds to scroll through these 9 major currency pairs if I was hunting an inside day. Now, obviously, if I'm looking for a signal day, we can look at each instrument to identify whether or not we have the weekly template giving us a signal day. So literally in a matter of seconds, I can identify signal days without staring at a chart, counting little pushes, trying to catch little moves back and forth. All I'm looking for are days that give me signals, and then understanding whether or not those signal days offer me a setup on that instrument, or whether an instrument in that basket from that major currency pair, if traders are so inclined, they can scroll through the Japanese yen basket to see if one of the other yen pairs is giving me a better setup on the day when I have a signal. Now let me repeat, these are signal days. So I don't have to do anything if I don't want to other than look to whether or not this market gives me a signal day, depending on what setup traders are hunting. And then whether or not in my session, whether you're trading Asia, London, or New York, I have a scalable parabolic opportunity. Now there are going to be session trades, which we have called our A+ opportunities. We're going to have range trades where the market may have a potential to go from level to level, from open till close. Or we may have a range expansion opportunity where a market has given us a signal day and now the market is about to go on a range expansion. Now here's the next component of that. Once I have a signal or a market has set up day one, day two, where's my scalable opportunity? Now I want to paint a picture. We've got our day two trades, potential range expansion, a scalable opportunity where, as Richard Dennis says, you can make a lot of money in a very short period of time. Challenging traders to get away from I caught the move to where can I scale in and the market is about to explode for a fast, explosive move where I can scale in and it's not coming back. My focus is where can I make money, not where can I get some pips. Where can I catch a move? Where is the scalable opportunity where I have the opportunity to make a lot of money in a very short period of time? And then whether or not that setup occurs in my session or does it occur in Asia or London. Now, if I'm trading Asia on the backside of the week, do I get that opportunity? Is it a nail and bail or is it an all-in A++ range opportunity, again, where a market is about to explode and I can make a lot of money in a very short period of time? Let's say I took 2 trades this week that were scalable in size in my session, and that's all that I took. That's enough to significantly compound my trading account. Not trying to catch moves every single day. Where can I make a lot of money and do nothing else in between, so that I'm not engaging in random impulsive trading, trying to catch moves or get pips? Where is the scalable opportunity to make a lot of money in a very short period of time, using size, not risking 1% on every little zig and zag in a market? Where is my opportunity to make a lot of money with a 90-10 edge on that setup? Now here's something I want traders to think about. Of course, there's nothing new in the markets. There's classical charting principles. We have Gann, Elliott wave, Taylor trading technique, beat the market maker, smart money, supply demand, COT reports, market profile, Donchian, Dow, swing trading, price action trading, position trading, scalping, swing trading, gap trading, algorithmic trading, end of day trading, trend trading. But here's the thing. You can trade all of these things and say, yeah, there's nothing new in the markets. But what are you doing, the trader? The trader's the only variable. The markets do the same 3 things every week. What are you doing? What setup are you hunting? Do you understand what parabolic playbook trade setups are? Let's look at this one more time. We had a first green day signal on Thursday on a dump, just a simple playbook, basic template, a dump and pump first green day template. Page 19 in the playbook is just a similar basic first green day template, dumping down Friday, Monday, Tuesday, Wednesday first green day, and a Thursday first green day opportunity. Just a basic example of a dump and pump first green day template from the playbook. Now, I just want to reinforce sticking to simple. This is a simple, similar template, subtle variations for a first green day opportunity in the Europe-London session. Zero stress, zero thinking, zero emotion. Breakout pullback, continuation after our first green day signal. Easy money. That's an easy template. Now we could contrast that with the pound yen. And several traders took the Japanese yen first green day trade on Friday. And for traders in the London session, that was just an easy money trade setup. First green day signal, it broke out, it made higher highs, it dumped down into the low of day current low of day level on the Friday for the Europe Open explosive first green day trade continuation. Now, there were traders who took the pound yen. Now, let's just go back to our basic model, opening range, initial balance. We had a market that broke out on Monday, expanded the range on Tuesday, day 2, making a new low of week level. Monday gave traders a first red day signal, closing and breakout. We reviewed that in the last video. Thursday was an inside day. Again, signal days. You can go back and watch the most recent video. We went over this fantastic day 2 parabolic opportunity after the first red day signal. Wednesday was an inside day, as was Thursday. That gave us a double inside day signal. That's from page 74 in the playbook. That can be a indication potentially of an explosive move. Not that common, but when they do show up, they may offer traders an explosive parabolic opportunity. But they may just offer traders the reversal or trend trade setup. Now, traders in Asia on Friday had the reversal setup, a session A+ opportunity. Now, remember, traders on Thursday got a first green day signal on the Japanese yen. So we have a double inside day. We've had the reversal on the pound yen. And so now traders in the London window have a first green day signal on the yen, as well as the double inside day on the pound yen. Traders in the Asian session had the high of day reversal, the A+ session trade back to where that pump began on our double inside day. We don't have any explosive breakout. We're just trading back off of a level to level. But traders in the Europe window now, so we had our first green day signal on our Japanese yen, which potentially now may be offering us a range expansion opportunity. Or we've got a session reversal scalp on our pound yen potentially brewing in our Europe Open. Now here's the question. Which setup is offering me the best playbook opportunity? And this is where the discretionary decision making of a trader determines whether or not we have potentially a scalable opportunity where I can put size into the market, or there may be another Japanese pair that's offering me a similar opportunity, again, signals. So for example, I can look at my Japanese yen pair, but at the same time I can look at the basket and I can just treat that as any Japanese yen pair. Which one's giving me the best signal? Each day it takes me literally 10 seconds to scroll through 7 Japanese yen pairs to see which one may be offering me the best signal on the day, but also keeping track of which ones have given me a signal. And then also recognizing what type of template could I potentially be in. Is it a pump and dump template, or is it a dump and pump template? Is my signal on the front side of the week, or is my signal on the back side of the week? Which instrument is giving me the best setup in my session on the day? And is it a scalable opportunity where I can put size into this trade and it may not come back? An ACB opportunity. Day 1, day 2, day 3, reset. Day 1, day 2, day 3. Friday's the closing range of the week. There are 2 types of opportunities on a well-engineered template: a trend trade opportunity or a reversal trade opportunity. Thesis: opening range, initial balance. In a high percentage of cases, one of these extremes will tend to hold as the high or low of the week. And then making a decision, executing the trade, understanding if it's a scalable opportunity, locking in the money, and walking away. Now, the whole point of this is that I'm not trying to catch every little zig and zag in the market. Number one, we're looking for signal days. We can follow a basket of 2 or 3 major currency pairs, or we can follow one major pair and look for signals on its cross rate pairs. But understanding also, are these session trades? So we have an opportunity for maybe a high of day to low of day session range trade for an A++ opportunity. There are going to be traders trading in the Asian window that may identify a scalp or a session trade for a scalp, an A+ scalp. And again, which instrument in that basket is giving us the best setup. And then we can have the A++ range expansion opportunity for a parabolic explosive move. 2 or 3 scalable opportunities in the week where traders have the opportunity to significantly compound their trading account using signal days, whether that's a first red day, an inside day, or a first green day. And then in your timing window, recognizing, is this a nail and bail, a reversal opportunity, front side of the week or back side of the week, New York, London, or Asia? And am I going to just take a position, lock in the money and walk away? Or am I scaling in because it's an ACB and we're closing out the week? But you'll notice I'm not measuring little pushes and counting gaps and sweeps or anything else. Looking for little catches of moves. Signal days, and then how does the market set up the following day? Which instrument in my basket is giving me the best setup? And am I scaling into this because it's an ACB or it's a high probability 90-10 explosive move brewing? Or is it a session nail and bail, scalp, lock in the money, and walk away? Asia, London, or New York? Or is it a choppy, messy market and this is still evolving and giving me a signal on the day for a potential setup the following day? So I treat the Japanese yen and its cross rate pairs as one instrument. Which one is giving me a signal day? If I have multiple signals, which one is giving me the cleanest setup on the day? Which one has given me signals already that this market is now preparing for a potentially explosive move? We have traders that may enter in at levels, and then we have our low-hanging fruit as the market is accelerating and about to explode. A scalable opportunity on the front side of the week, and then we have our reset, Wednesday, day 3, the midpoint range of the week, and a signal day. Day 1, day 2, day 3, midpoint range, reset, and signal day. And that signal day doesn't trigger anything until later in the New York window. No trade setup. But that breakout at the end of the New York session is also a signal. We have an inside day now that's been broken out of on day 2 on the backside, and a market that has broken out again on Friday, day 3, making higher highs. Higher highs on day 3, dumping back down into our inside day breakout. Now, again, the question is we had multiple signals on different yen pairs. We had a double inside day on our pound yen that gave traders in the Asian window a reversal setup. Then we had first green day signal on Japanese yen. We had an double inside day on our pound yen, and we have a breakout of the inside day on our euro yen. And we also had the breakout of our inside day on our Swiss yen. Multiple signals. Which one is giving me the best setup? Now, in some cases, traders won't be able to differentiate. Take one trade, understand that, is this a parabolic opportunity? If it's an A++ opportunity, I'm going to use more size. Why? Because I want to make as much money on a 90-10 setup. I'm not worried about catching pips. Now, if I have an opportunity, an A++ opportunity on the front side, and I have an A++ opportunity on the back side, and I only took 2 trades for that week, that's a week's pay. That's a week's pay. This is where traders need to shift their thinking from trying to catch moves every day and grabbing pips to where can I make money? Where can I make scalable money? As much money on a 90-10 setup as possible. That doesn't mean I'm taking more risk. If I'm scaling in properly and the trade is accelerating and confirming my thesis, where can I make as much money as fast as I can and then not do anything else in between, not be taking other trades, catching moves, even though I might be right. Why do I want to trade more when I can trade less with more size? I'm here to make as much money as I can, not trade as much as I can and grab pips. And although you might get a direction right, would you scale in heavily into that opportunity? Or Or would you rather scale into a market that may now potentially go on a range expansion? We're trading back up to a level. This market has the potential to come back. Or we have a market that may now be expanding the range and offering me a better asymmetrical risk-reward opportunity, and I can scale in with more size. Which one may have the highest potential for not coming back? Which means I'll have zero stress, zero thinking, zero emotion, and for the most part, zero management other than locking in profits. Which comes back to my first statement that traders are the variable. Markets do the same three things every week. Now, that was just an example on the yen, the Japanese yen cross pairs. We can do that on any market. We can do that on the pound and the pound cross pairs, the euro and the euro cross pairs, etc. We can look at indexes and treat them as one. For US indexes, treating them as one. Which one gives me a signal? All markets are the same. They all do the same three things. Which ones, though, are giving me signals? Which ones are giving me the setup in my session? And which one is offering me the scalable opportunity? And if it's not simple, just taking a position, placing a stop loss, and a take profit level. If it's not simple, you can't reproduce your results. You have analysis paralysis. You'll be inconsistent, and you'll jump around and change things every day and every week. Markets do the same three things every single week. Traders are the variable. The big thing to take away and to understand is that you make a lot of money when you have the opportunity to scale in. Not worried about catching little moves if it's not in your session, if the market's already moved. Recognizing that you may be in a larger template that is still going to offer you a frontside opportunity or a backside opportunity. Which is why if you're following a basket of instruments, you can sit on your hands and wait until the scalable opportunity presents. You may get one on the front side, whether it's on a currency, an index, or a metal. Or you may have that opportunity on the backside of a week. An excellent question from a trader was, well, how do I know if I'm just getting into a false signal? Do your homework. Build your muscle memory, and then recognizing the timings, the levels, the behavior of price. Are you front side or backside? What time is it? What is the behavior of price? Do I have an opportunity now for a market that is coiling for a potentially explosive move? Is this an A+ setup, an A++ setup, or an A+++ setup? If the train has already left the station, is this the low-hanging fruit explosive move? Remembering that 2 to 3 of these opportunities a week can significantly compound your trading account, whether they are on the front side of the move or whether they are on the back side of the move. The trader is the variable. Markets do the same three things every single week. And then, do I have a session scalp, a session range opportunity? Is it nail and bail, or is it all in, hold till close? Keep things simple. There is nothing new under the sun, but what is new is whether or not the trader themselves becomes a rock in a sea of chaos, or if they're counting little bars and pushes and hoping to catch a move and grab some pips. Or are you looking for scalable opportunities where you can make a lot of money? There are days and setups where it's really easy to make a lot of money on, and in between doing nothing else but sitting on your hands and allowing the templates to set up. Keep things simple, traders. Rinse and repeat. Scale them up in size. It's about making money, not about catching moves. Keep it simple. 1% better every single day, traders. And may the markets go with you.